This is the exact strategy I use every single day to make profits. It is stupid simple, crazy reliable, and so simple that even complete beginner could understand it. I will break it down in 3 simple steps, show you real examples so you can actually trade it in real time. So without any more yapping, let's just get into it. And as you can see in front of me is my profits for July 2025, which is last month, and I made just over $25,000. And if I did it, you can do it too. And I also recorded everything. Like, I have proof of everything. I have every single trade filmed. I have literally everything. So trust me, in today's video I'm gonna teach you everything you need to know, and basically it's going to be so simple. It's going to take only 1 hour a day, and trust me, this can be you one day only if you stick to these rules that I'm gonna give you today. So goal of today's video is gonna be for you to make profits in less than 1 hour a day after the market open using my exact strategy. So you're going to basically become consistently profitable day trader if you actually implement everything you have learned into this video. So there's not gonna be anything like daily biases or thousands of fancy concepts or even any indicators. We are just going to learn about pure price action. So we are just going to focus on these 3 simple steps. So we are going to focus on the structure. Why structure? Because structure is basically going to be the whole narrative behind the trade. Like, you're gonna see how we implement structure with the market logic to actually take a profitable trade, and it's all going to be logical once we go over 3 simple steps. And basically the second one is liquidity. If you want to take trade and make money, you just need to see some kind of fake out move or some kind of manipulation happen in the market where people get stopped out, because as you know, 99% of traders actually lose money, and if we want to be in those 1%, we need to wait for those 99% of traders to actually lose money, which is unfortunate, but somebody has to lose money for us to make money. And the third step is entry. Trust me, this is going to be one of the easiest and best entry models you've ever seen in the market. I'm gonna tell you exactly how to place your stop loss, take profit, and it will always be on the 1 minute time frame. And that is gonna be the last step that we are going to go through, and trust me, after that all you have to do is go on the chart and take live trades. So basically we are not going to do anything complicating on the charts. Like this, all you see on the charts is completely useless because we are focusing on simplicity, because simplicity is actually profitability. And a lot of people like misunderstand. They think that every single profitable trader has thousands of indicators on the chart, has thousands of concepts that he uses daily, but actually the simplicity is profitability, because you don't want to have a lot of different stuff interfering with each other. You just want to have simple, like, based rule strategy, so you cannot literally mess up. You can do the same thing every single day and expect nice good results. The step number 1 is going to be on the 15-minute time frame. You are going to come to the chart at 9:30 Eastern time, or you can come on the any market open. So this is New York market open, which I like to trade the most. You can do it on the London open and on the Asia open, but I like it the most and New York open. So basically what we are gonna do is I like to go on a 15-minute time frame. So time frame is going to be 15 minutes. We are going to come at the open, and we are going to mark out recent highs and lows. So that is basically going to look just like this. So this is a nice obvious high in the market, this is a nice obvious low in the market. So basically that's all that's the whole step number 1. So this is our structure. So we understood that this is right now the market structure. So we went to the upside, we went to the downside, and we just made a little move to the upside. So we are right now here in the market, and you can see that we have a obvious low in the market, obvious high in the market, and that's it. All you need to do is mark them out. The next step is going to be wait for the one side to get swept. And why is this? This is basically manipulation in the market. I'm gonna explain to you right now. As you can see, we have this side swept, but what does it actually mean? So I have to explain you a bit about the liquidity. So liquidity, you probably heard about it, but this is the clearest example and clearest explanation you're ever going to get from anybody. So let's say this is market going to the upside. This is just some basic structure to the upside, and market is just, let's say, making a uptrend. So it's just going to the upside, making pushes, small pullbacks, and more pushes. So what is liquidity? How can we implement it into the market? So as you can see, we have this high right here. And what is at this high? A lot of stop losses. Why is there stop losses? Because some people who are, let's say, expecting some kind of reversal to the downside, they are going to place their trade, let's say, right here. So they are going to enter, oh, I removed everything. So they are going to enter their trade right here, target something to the upside, let's say like this right here. They are going to target this right here, and they are going to put their stop loss right here. And what is that? Stop losses equal to liquidity, because liquidity is basically fuel to the market. So when the market does not go to the downside, but it goes to the upside, it is going to take those stop losses, and that is going to be fuel to the fire, which is going to make market able to go to the upside. And then what is again going to happen? We are going to stall, market is going to start a pullback, because it is missing some kind of liquidity, because we have used all of this fuel right here, all of the stop losses, and we need to like generate some kind of fuel. So market is going to do a little pullback, fake out a lot of people that are going to think that market is going to the downside. A lot of people are going to enter the trade right here, put their stop losses right here, and basically wait for the market to, let's say, target this low down here. And what is market going to do? It is going to manipulate them out like this. But actually the thing that is going to happen is liquidity sweeps are going to happen to the both sides. So if you have, let's say, structure like this, what is going to happen? We have liquidity here and liquidity here, because a lot of people are going to enter shorts right here, put their stop losses right here. They are going to enter longs right here, put their stop losses right here. So market is often going to do this, sweep this high, and then go for this low down here. It doesn't want to ride for some reason, and it is going to go like this. So trust me, this may sound complicated, but trust me, through the end of this video, if you make it till the end, you are going to be 1000% clear on what is liquidity and how to implement it every single day. So let's just go with the next step. So we swept the liquidity, we took all of the stop losses. So stop losses is this line right here. This is the stop losses, because that is the high in the market. And basically, what is another liquidity? This one down here. So this is the stop losses that we are going to target. So what do? We scale down to the lower time frame right here. We are always going to do it on the 1 minute time frame, because that's the entry time frame. We want to refine it so we get the best risk to reward, because if we enter the trade, let's say right here, and put our stop loss right here, basically we are going to risk this amount, and this amount is going to be reward. So it's best to have huge risk to reward and huge win rate, because then we are just going to be the most profitable. But if we enter the trade, let's say right here, and put our stop loss right here, we are basically going to have this much of reward, and we have to risk all this. Like, it's just a lot of risk and not a lot of reward. So it's best to enter on a 1 minute time frame. So we are always going to do that. So basically, once I show you the entry model, all we are going to do is target the opposite liquidity, and trust me, it's always going to work crazy like this. So it's always going to catapult to another liquidity to hunt more fuel in the market. Now we go to the important part, which is entry model, and it's going to be money printer. Like, it is so simple and so logical. Just trust me and stick till I explain it all the way till the end. Also, if you like this style of content, you can leave a like, subscribe just to support me and to never miss a new video. So this in front of me is the entry model we are going to use, and I'm gonna explain to you why is it so logical. So the first thing, you probably already know this, like everybody who is trading for like 1 or 2 days knows what a fair value gap is. So if we have, let's say, one candle right here, then a second candle right here, and a third candle right here, so we need a minimum of 3 candles to create a fair value gap. So we have 3 candles. You can see that first one is like neutral, it's just normal candle looking like this. Second one has to be a little bit bigger body than any other candles, because we need to create this hole in the market. So this one needs to be some kind of impulsive candle or strong candle to one side. Then this candle also does not matter, but what matters is from the first candle's low, the week's low, and the third candle week's high is a fair value gap like this. So I marked it out on the chart beautifully, and if the wicks are like this, of course there is no valid fair value gap, because there wouldn't be any like hole or imbalance in the market. So we always need to see some kind of hole from here to here, and basically once we leave that, this part is going to be after the liquidity sweep. So this is going to be liquidity sweep right here. So this is liquidity. It's a little bit harder to write, but this is liquidity. And after we get the liquidity sweep, we are going to look always for the last imbalance on the 1 minute time frame. So 1 minute time frame is best to learn. Of course, you can go more advanced and actually do it on a lot of different time frames, which I like say in few other videos, but in this one I'm just going to focus on the 1 minute. So 1 minute time frame, basically we have this displacement, this imbalance, and what we are going to do is we are going to mark it out exactly like this. And what we are waiting, since we want to trade towards the upside, since we just took this liquidity that was to the downside, we just took it, so we want to trade towards the upside and we want to target some kind of liquidity towards the upside. So we are basically going to wait for the disrespect of the fair value gap. So as you can see, this candle right here, it closed right above this fair value gap. So this was the top of the fair value gap, and we actually had a close, like market actually closed and generated and started basically generating a new candle right here like this, and we are going to enter the market right on the close. So if we get a close above this fair value gap, we are just going to enter the market right here, and we are going to put our stop loss right below the fair value gap, right below the body, right below the wick. It doesn't matter. Basically I like to usually put it right below the body, but it's all up to you. So basically that's it for the entry part, and trust me, same goes for the downside. It doesn't always have to be a single candle, it can be multiple candles. So right here you can see that we have, let's say right here, liquidity sweep, because that part is necessary. So this is liquidity right here. Then we have a imbalance in the market right here. We generated one candle, second candle, you can see this one just wicked inside like this and went back to the upside. And then we have this candle, the second candle right here, that actually closed below. So we are going to enter the market right here and put our stop loss right here. So this is the stop loss, and that's basically the whole logic behind this strategy. So with all of that being said, we are just going to go to actual chart examples. And also guys, if you want, you can like the video, subscribe, and also guys, if you want to skip all the basically losing around the YouTube videos, and like if you want to get straight into making profits, I just launched my mentorship, so check that out if you want to. Okay, so here is the chart example on the screen. So if we look at the chart, you can see that market is kinda in the middle of this whole move. So of course it is 9:30, it is the market open. So first step is always going to be the same. It's always going to be spotting liquidity on the chart. So if you look at this high right here, it is nice and obvious, and this low down here, it is nice and obvious. All of these right here, these highs and lows, are already taken out by the liquidity, and you can see also the same pattern that we talked about. This liquidity got taken out, moved towards the downside, this liquidity got taken out. So it's literally, this already happened and it's about to probably happen again. We are going to see. So we have this high, we are just going to mark it out like this. Then we have this high, low down here, and basically we mark them out like this. And of course we just wait for one side to get swept. What I like to do is I like to sometimes scale down to lower time frame so you can exactly view when that happens. So let's just wait. Looks like the market is going to the upside, so we are waiting. And is it about to sweep? It actually came back, and let's see, it is very close, and there it is. So what we are going to do right now is basically the third step. So we marked out the high and low, we got one side swept, which is liquidity, and right now we are on the third step, and here it's a little bit more complicated. So if you look on the chart right now, I said that we need to always like mark out the last imbalance of the market, and if we mark it out, it is this one right here. So you can see it is just a hole in the market. I'm gonna remove this liquidity sweep because we just saw it happen. So you can see that we have this liquidity sweep right here, but there is a multiple in a row. So you can see we have this one right below it, so multiple of them happened in the same leg. So we are just going to mark all of them out. So you can see these 3 fair value gaps. So what we are going to do, we are going to wait for every single one of them to actually get swept. So you can see that this one did not close any of them, so we need close somewhere around here, somewhere around this area. So let's just see, does that happen? So if we forward the market, it actually does happen. So what we are going to do is we are going to put our short position on the close of the candle. So we are entering shorts right here, taking the stop loss. We are going to either put it on the body or on the fair value gap. You can always put it above the fair value gap or the body if it's above the fair value gap. So it's all up to you, but I like to always put it somewhere above the fair value gap like this. And basically the other step is of course to target this move to the downside. So this is the liquidity sweep that we marked out previously, and it is going to be nice 3.5 risk to reward, which trust me, it is huge with the amount of win rate I actually get in the market. And let's just see how is it going to play out. We can even enter the higher time frame so we don't have to wait, because we just want to get through this video. So you can see we just swept the liquidity right here. So this would be our total take profit. So if you guys, let's say right now, want to target to the upside, you can completely do that. So this was the first sweep, and right now we targeted the downside, we got the move. Right now the second sweep. So can we theoretically target to the upside? Of course we can, but there is one problem. So all of this right here was stop losses. So this was stop losses, this was stop losses down here. So basically we now swept these stop losses and we now swept these stop losses. So theoretically we can go towards the upside right now, but there is not much stop losses up here. So if we want to enter towards the upside, there is not much probability that we are going to go all the way to this high, because of course lower stop losses, I mean less liquidity, so it's less probability that we are going to go all the way up there. So let's just see, do we have any entries down here? So we just swept this liquidity. So we have nice fair value gaps formed on the 1 minute chart like this. So let's just see what will happen. Will we inverse it or what will happen? So we actually did inverse it right here, and let's see what will market do. Will this trade play out all the way to the upside, or will it stall and go to the downside, because there is missing liquidity right here because we already swept it. So let's just see what will happen with this trade and how much will it go to the upside. So right now it has pushed quite nicely, so let's just wait and see. And there it is, it didn't go all the way to this high. Why? Because there is no stop losses. We actually swept all of the stop losses with this move right here. So there is going to be not much stop losses above this high, because not everybody is trading when the manipulation happened. All of people are scared that market is going to continue going to the upside, and they are just going to lose money if they enter to the downside. But that's what 1% of people know, that this was just a manipulation, not any kind of break of structure or stuff like that. So we are going to use always this to our advantage. And if you want to catch some kind of this trade with basically second sweep of liquidity, you can do it, but you usually don't want to target this main high right here. You just want to go for, let's say, 1-to-1 risk to reward, 2 risk to reward, or something like that, because let's say you can target this high right here, because if you target this high all the way up here, it is not that high of a chance for it to basically work out. So guys, just before you leave the video, I'm actually going to give you something for completely free, because you made it all the way through the video. So I'm going to give you a complete free 10-page playbook of my whole strategy. So all you need to do to claim it is basically go down there. It's gonna be a link in the description. You need to join the server and just claim it inside there. So trust me, this can literally be a cheat sheet for you to trade this strategy in the live markets. And with all of that being said, If you guys like the video, you can leave a like, you can subscribe to the channel. Also guys, if you want to get work with me one-on-one, so basically personally work with me and basically guide you to success and to everything, you can click the link down there and get started. So yeah, with all of that being said, I'm gonna see you guys in the next video. Peace.